Nobody should be surprised that markets are lower here. It seemed like the shift in the data points was pretty clear, but if you missed the weekend update, make sure you're subscribed to the channel so you don't miss another opportunity in the future. Now that the breakdown has ultimately taken place though, it's probably not the best time to start a new money short. So let's build a game plan to deal with that reality and jump right into the charts. We'll begin on the SPY daily time frame chart. First and foremost, what do we see in terms of the trend? The trend is certainly down, but let's be a little bit more granular than that. Where are we in the current trend cycle? You've got these lower highs and consecutive lower lows, and as of today's close, you've closed out a massive lower low. So your risk reward for new money shorts down here is absolutely not favorable. You do not want to be short in the hole, as it's called, with terrible trade location. If you're already short from Monday or even at the highs of today's session, the highs of Tuesday's session, if you've got them, hold them, right? That's fine. We're in a daily downtrend. There's nothing wrong with that. But to initiate a new money short dead on the lows, a little bit less than ideal. So how do we navigate this situation if you're looking for a new short? Really need to rely on this level right here at 503. 503 represents the beginning of the NVDA earnings gap. It's also two previous weekly highs. If we open over 503, we're looking for a counter trend move on a look into the gap and a failure, as well as the opportunity for a possible weekly higher low. Let's go to the weekly time frame chart really briefly and take a look at what's happening over here. We'll bring out the Fibonacci's from the January low up to the all-time high. And if you've been following along the weekend updates, the Wednesday updates, we've been talking about this level for a while now. Those are the two equal highs I was just pointing at on the daily time frame chart. It's confluence with your Fibonacci 38.2. We know that the weekly trend is in the upward direction, and an open over 503 starts to suggest a weekly lower wick forming off of this area, which, as we know, is a beautiful spot for a weekly higher low. So the time to be thinking about the weekly higher low is right now, not necessarily once this has already formed a hammer and we're trading back up into the equal high, right? So let's bring it back down to a daily time frame chart, and we'll even probably navigate down to the hourly in just a second as well. Let's talk about how we actually execute this trade. So on an open over 503, but underneath that 505.65, the two equal highs from Tuesday and Wednesday, we'll look for a break higher low intraday and a counter trend move to take us into the retest level of 509. 509 is incredibly important because it represents the retracement of thin structure here through the Monday afternoon breakdown. If I show you the market profile, here it is. H period has single prints. This is Monday's session right here. H period represents single prints. If we can crack up and over the two equal highs that we were just describing, it's getting us into the single prints for that thin structure retracement. Then lo and behold, half back, the single print closure, is the same thing as the Friday low. So that becomes your obvious target. The ES level is at 51.54. If we flip back on over to the candle charts, that looks exactly like what we've just described consolidation here. Break higher low, then we're looking for this retest of 509. You can see Friday's low. That would also keep us underneath the 50 SMA. So in continuing with the daily trend, right, if we're following the daily trend, we're looking for a lower high to be set at this particular level. Now, of course, that's at odds with the weekly time frame chart, but into the end of this week, I think we want to be focused on 509 lower highs, and if we go through it, 512.50 lower highs. This is your line in the sand for the bears to remain in complete control on all of the time frames, right? So that is that. If over time the weekly higher low is going to hold and we get sort of this open and then this, and then there's a higher low and something that does this, maybe this turns into a double bottom, but let's not jump the gun into a Thursday and Friday trading session. We've only got 2 days left. Let's take it one step at a time, right? So that's on an open over 503. We're looking for that lower high to be set on the back test of 509. When and if we get there, we can actually take it on down to an hourly time frame chart. Here we go. When and if we get there, so an open here, break higher low. When we get here, I will be thinking about the opportunity for a double top and a reversal back in the downward direction. It could look like a head and shoulders and then a reversal back in the downward direction. It could look like a very simple inverted hammer that closes here, then a reversal back down in the downward direction to align with the daily trend, right? We're looking for that daily lower high, and that's what 509 possibly represents into the end of this week. Let's talk about the open underneath 503 now. There's two things that can take place. If we open in range under 503, really, we can get an opening drive to the downside that closes the gap, and I would not participate short on that particular move. There's just no good way to set up the risk reward for that to make sense. But when we get to 497, I will be thinking about the opportunity for a double bottom, inverted head and shoulders, or a very simple hammer candle down here to then set up the possible move back into 503 for the offering of a lower high, right? Because the daily trend is still down, we would be printing a new lower low. In all of these instances, you can still find a lower high up against this level, and that sort of negates the weekly higher low thesis. So we would not be as bullish in this situation. So you're not looking short, you're actually looking for a long counter trend or being very, very patient for the short up against 503 as a possible lower high entry. Now, 503 can also act as a lower high entry if we get an immediate opening drive to the upside on Thursday, find a reversal pattern off of this level. As a matter of fact, the hourly chart's going to do us well here. If we open down here and get something very similar to the afternoon of today's session, Wednesday, right? You'll notice that we can get some sort of double top up here. Then this starts to make sense. If you can go short on the breakdown of the neckline with a stop over 503 and a target as the gap close, you're dealing with loosely, possibly like a 2-to-1, 2.5-to-1 risk reward ratio, and that's in force. That is definitely something I would be paying attention to. So that's really my take here on the spiders, at least. And if we take a look at the market internals, this is going to keep us grounded in the reality that when I'm talking about upside on the daily time frame chart, on the hourly time frame chart, it's just a counter trend move. Look at the substantial volume outflows when we broke down last Friday. Look at them on Monday when we broke down. Look at them on Tuesday when we were just going sideways and consolidating. Look at the advanced decline line on Monday, wall-to-wall move from opening in trend higher zone or near trend higher zone to trend lower zone by the time the day closed. Tuesday, small counter trend move in the upward direction, at least out of the advanced decline line, but still negative at the close. If we take a look at the cumulative builds, strong build at the exchange level on Monday, indicative that sellers are totally in the driver's seat. Again, when we're talking about a counter trend move over here to get, let's say, a breakout here and a test of 509, we're not overstaying our welcome at this particular level. The internals clearly illustrate that there has been a change in tone, right? So that's worth understanding. But if we look at today's session, right, it was fairly neutral. So is there a bit of exhaustion in the downward direction? You can also see no cumulative build down here. Is there a bit of an exhaustion move in the downward direction? It's possible. And again, that opens the door for the counter trend move to happen in the first place. The next thing I'll show you back on the market profile is if we do take out these equal highs, the Tuesday and Wednesday equal highs, you're getting this point of control to flip, this point of control to flip, and this point of control to flip. So anybody who's short from this area on the Monday breakdown, anybody who's short on Tuesday during the balance, they're likely going to add buying pressure to the market by stopping out of their positions over those two equal highs. And once again, your target here is 51.54 on the ES futures. Let's go back on over to the candle charts and we'll quickly take a look at the NASDAQ, IWM. Then I'll just point out a couple of key data points before we send you on your way for an abbreviated Wednesday update. What do we see out of the NASDAQ? We're already at the NVDA gap close. So what would this suggest? If the market's going to see a gap fill reversal, we're looking for buyers to step up around this 425.75 area. Now, the candle structure is not indicative at all of buyers even remotely being close to stepping up near this low. If we take a look at the hourly side of the Qs, you get a little bit of that here, but notice how if this was going to stick, you should have stayed over the hammer high on the hourly. It actually offered a lower high in the upper wick of the last hourly bar, which is technically a 30-minute bar if you're adjusting for the market open at 9:30, right? But regardless, this is not indicative of stronger buyers stepping up. So what would I say here? If we can actually clear that hammer high again, which is loosely around 427.25, you guys know the rules up here in the penthouse. Let's go round numbers only on that level. If we can clear this, maybe there's a counter trend move which kicks off the retracement looking for a daily lower high. And that daily lower high, so here, right, this is a scalp. Do not overstay your welcome at this level in particular, because if we go back to the daily time frame chart, we've already got the indication of a lower high being set on the balanced low retest, which is Tuesday's high. That's a daily inverted hammer. So in that upper wick, of course we had sellers stepping up. Of course there's downward pressure, and we saw that follow through today. But to continue to push your luck in the downward direction here, I think, again, it's really poor form as we come into an area of support. Risk reward is not favorable for the downside. I would be looking for the lower high. So on the hourly chart, as we just described, if this is going to act as a very short-term nuanced double bottom, clear that higher low neckline. There you go, over 427.25, looking for the lower high on the back test of this level, keeping us underneath this as a bear flag. Bears will retain control if that's the case. For the buyers to really step it up here and show me that they're going to change the tone of the market, oh my goodness, we're going to make new all-time highs, we've got to get a higher low up and over 433.75. Based on the tone change, based on the bar from Monday, Tuesday, and today's Wednesday session, it would seem as though those are lower probability outcomes into the remainder of this week. We can even take a look at the NASDAQ market internals, and what you'll see over here, bearish outflows on Monday when that breakdown was taking place. You'll notice we go wall to wall on the advanced decline line for today's session, bearish cumulative builds across the board. Now, I will concede that on today's session, volume-wise, not really the end of the world. We didn't have substantial volume outflows. So are we getting a little bit tired in terms of the sell side pressure? Is it possible that the counter trend move can unfold? I think the answer is absolutely. Let's move on over to the IWM, because on the IWM, let's go out to the weekly time frame chart. This is going to continue to act as a nail in the coffin for the S&P 500 specifically, not so much the NASDAQ, but the S&P. Notice your weekly balance highs, right? This is a multi-year weekly balance range, and we have failed clearly on momentum back down underneath that level. It's still technically possible that you could go low, higher low, higher low if we turn around right here, right now into the end of this week. However, what's the concern? Any lower highs that are set underneath this start to suggest weekly head and shoulders, kiss this thing goodbye. It's no longer going to act as a tailwind for your S&P 500. If we go back on down to the daily time frame chart, let's get a little bit more nuanced and granular here. One of the interesting things about the trend is that, yes, we are sitting on this lower low, but there was actually a very, very minor uptrend that formed on the Tuesday session. We can see it on the hourly chart here to qualify that as a lower high on the daily, right? So here's a low on the Tuesday morning, and here is a higher low into the afternoon. We opened on a gap up this morning, right? So with that taking place, this was technically a counter trend move, classifying this as a daily lower high, and therefore we can really look for an equal low breakdown and continuation into something like this previous low at 190.50. Are we extended through the lower edge of the weekly expected move? Technically the answer is yes, but I wouldn't be overly concerned about that considering the magnitude of the loss of the weekly line in the sand, weekly LIS line in the sand, here at 199. The Russell internals are just as bearish as everything else that we've seen, so what we'll do now is take a brief glance through a couple of sectors just to continue to point out that there's a change in tone. XLF, the second heaviest weighted sector by market cap now, is still in a downtrend and it's sitting on these lows. It didn't really get a rebound off of the failure to get follow through on earnings on the Tuesday morning open, right? There was nothing there on Tuesday in terms of getting even just a little bit of lift to provide some counter trend. So we're still bearish here. You know, if we break the two equal highs, sure, you could still technically set a lower high here and continue in the downward direction. So once again, when we're talking about not wanting to position for new money shorts dead on the lows of the move, we're not talking about that means we're bullish. It doesn't mean we're looking for new all-time highs, right? So financial is a pretty clear example of that. We'll move along to something like your XLY. Also saw a substantial move to the downside on Monday, losing this major area of support. This also strikes me as a bearish data point. Now there's clearly the opportunity for this. If we take a look at the XLV healthcare sector, this chart is just absurd. I don't think I've seen something like this in a very long time, but look at these equal lows, lower highs coming into them, right? This is really just a flush point. Now I could envision this being a bit of a trap. Now, it doesn't mean it has to unfold this way, but please do not be surprised if the XLV breaks underneath 138.25 and instantly finds a higher low on like a 5-minute chart back above 138.25, that you're going to have all of these shorts who are just chomping at the bit to get paid on this breakdown who don't get paid on this higher low back above. I think you see a look below and fail on this as a balance range, and that would, sort of imply upward pressure for the S&Ps aligning with the counter trend thesis we've sort of developed in today's session so far. Here's the XLK. It's going to be very similar to your QQQs as a proxy, obviously flushing the balance lows. Very possible for a lower high in here. So we're not changing our tone. We're not saying new all-time highs, but is it possible you find support off of this level? It's definitely possible you see a little bit of a relief rally to set the next lower high. SMH is also a good one to take a look at here, breaking down into this weekly area of support, right? This is a weekly higher low. We're right at it. Again, if we open over or under 212, we'll be fairly telling out of your semiconductors. Let's take a look at some ratio grids very quickly. Again, the idea of today's session is to be a little bit more brief than normal. You can let me know in the comment section if you like this, but the XLK is in a downtrend. So are we bearish? The answer here is yes. This is really more neutral with the opportunity to suggest a lower high. XLV is defensive. This is certainly not helping out of consumer discretionary. If If we look at the risk off sectors, XLP is starting to perk up here. The XLU is also starting to perk up here. So starting to see some defensive posture. If we take a look at some specialized ratios, this is breaking in the downward direction. So what this is telling us is that folks would prefer the return on a risk-free government-backed short-term bond versus the longer-term risk and obviously reward that comes with that of the tech sector as of right now, right? So that's a risk-off indication. Same thing in a number of these. This is the XLK XLU. Lower high being offered here is bearish. Let's take a look at the XLP XLY. So this is apples to apples, moving towards the bottom end of its range. We'll take a look at the SMH XLV, moving in the downward direction, but not yet underneath that 50 SMA. So maybe a little bit of a saving grace here, but not much, if I'm being honest with you. Let's move on over to the Dixie. And again, speed round here is certainly higher. This is putting downward pressure on stocks. There's no arguing with that. Let's take a look at gold. Gold is still neutral up towards those highs. We'll jump on over to the TNX, which certainly has the opportunity for a higher low over the breakout point, which we've discussed a number of times now at 4.33. If that takes place, maybe you get some short-term alleviation. So once again, counter trend move can totally take place if the TNX pulls back a little bit here, but the threat is that the higher low sticks and we continue in the upward direction. Moving along to, let's go to bonds directly. You can see that these uptrends are continuing to signal that the market has less of a preference for longer dated risk, more of a preference for shorter dated risk. Credit spreads are still bearish, as we discussed in the weekend update, especially in the short duration down here with this creeping uptrend. Again, it was becoming too hard to ignore. It's a good thing we did not ignore it and sort of got ahead of the breakdown on that Monday session. Let's take a look at the HYG in isolation, continuing to print massive new lower lows. This, of course, is bearish. There's no arguing with that as we take a look at this screen. Bitcoin's not doing much. It's towards the bottom end of its flag range, but I do want to focus on breadth for just a little bit before we jump into a couple of ideas here out of the core list. You can see out of breadth, we are negative. And as we're negative, that's really not helping the case for a sustained move in the upward direction out of the S&Ps. Remember, you can afford to be here. You can afford to not have blockbuster reads around 400, but being negative, you're not going to get a strong move to the upside out of the market if breadth is deteriorating. You can see similar indications, more specifically out of the SPX A50R, breaking firmly underneath the 50% mark, meaning that 50% of the stocks in the S&P 500 are trading below their 50 SMAs, even like more than that, right? So 28% of the stocks in the S&P 500 are above their 50 SMA. So you can do the math on the reversal there. Obviously, that would give you 72, right? So let's take a look at the RSP. RSP is trading into this equal low. So again, supporting more of the thesis for a counter trend move. If this massive area of previous resistance can act as support, the counter trend seems to make sense to me in this particular location. Here is the QQQE, just massively divergent. So still playing some catch up out of the weighted NASDAQ. I would continue to look at this as a bearish data point. This does not speak to counter trend move. This speaks to sustained bearish activity at the exchange levels. Let's move on into the VIX because the VIX is still elevated. It's well over the 15 mark. This, of course, is a hallmark sign of more bearish markets. Let's take a look at the VVIX, still elevated as well, near that 103. So we're not out of the woods. Once again, I think the point in looking through some of these additional charts is just to continuously reinforce the idea that we're not bullish. We're just looking for a counter trend to set a lower high. Let's quickly look through the core list of companies, and I'll send you on your way here. Apple, 100% retracement, trading back down into the lows. If we take a look at the hourly time frame chart here, this is technically a lower high. I would look for consolidation here into the end of this week, and then early next week, the breakdown of 167 is very interesting on the daily time frame chart. There's some room to run into 162.75. If it's going to be if there's going to be a big move to the upside, you got to show me the acceptance. You've got to do something here. Apple up and over 173.75. We're not there yet. Microsoft, what do we see? The balance range breakdown absolutely acting as overhead supply on Tuesday with the lower high in the upper wick of the inverted hammer. Absolutely. So certainly thinking about bearish opportunities, bearish consolidation here. If we take a look at the hourly chart, actually, you'll notice there's an opportunity for this to turn into bear flag, right? So if you break that low, looking for possible continuation, you are sitting on the lowest low. There's not very much reward to the downside, so it would have to be a very, very quick and sharp intraday setup that clearly tells you where that stop loss needs to be set. Let's go back on over to Google and see what's going on over here. Certainly a little bit more convoluted on the daily time frame. You're not getting nasty red follow through on today's session, only down about 1/10 of a percentage point. If we take a look at the daily time frame chart, this is actually looking a little bit more interesting, right? So if this is going to offer the man ray pattern, very classic, right? This right shoulder is certainly in play. So you could look for a breakdown of this trend line to get you to the equal lows over here. And then an equal low breakdown is a break technically of your neckline. That would be underneath 153.15 for a move in the downward direction. Moving along to Nancy, what's going on with Amazon over here? Same thing, except if we take it back down to the hourly, you can see here is your head and shoulders. So same semi. Lower highs are really constructive under 182.80, consolidation down here in flushes, opening the door for downside. NVIDIA breaking down and moving firmly back down into this equal low. So this little dance was nothing more than a fake out. If we go to the daily time frame chart, I would really start to encourage you to pay attention to this pattern right here. Is this a head and shoulders? Can we get some firm movement in the downward direction? There's still a big roadblock at 802.85, but overall, with semis sort of slowing down a little bit, you can see this weakness. We saw the SMH slowing down as well. The double top is possibly a threat. I would be very mindful of this breakdown and, of course, what that implies for the broad market as a whole. AMD, very similar. Obviously, there is your head and shoulders. Stronger breakdown on today's session. If we zoom in on that, I mean, just clearly, let's go on down to the hourly chart. I was actually thinking that hourly inverted head and shoulders was going to pop higher today. Clearly wrong on that idea. Luckily, no break of the neckline first, so no harm, no foul. Anyways, as we look forward on this chart, I would look for the lower high underneath this level right here. Again, you do not want to be the sucker short, getting short in the hole. I would prefer to be short on the lower high reattempt at 158.50. The downside target, 150.35. So if we drift, just like what we said in the S&Ps, right? I would prefer to wait for this, then look for the counter trend, set up the lower high here, then trade for the stronger downside outcome. Next up, Metaverse. What's going on with Mark Zuckerberg? Clear rejection into the afternoon of this level here, 498.85. Looking for continued bearish activity as long as we're underneath that level. So no real changes out of this chart. Thinking about downside, thinking about daily, 100% retracement, 482 is that possible target. Next up is Tesla. Continues to get absolutely hammered. Bearish consolidation on today's session. Really leaves us with nothing more than balance rules in force. If we're going to stay sideways in this range, there's really not much to do there. If we can break up and over the highs, that's awesome. We're looking for a gap close overhead at 161.25. If we look to the downside, again, I probably wouldn't look to go short in there just because the risk reward, unless it's very well defined, I don't really see it. I would prefer to say, what's the opportunity for a long off of 152 after this range breakdown, right? So that's that. Netflix is out of play because of earnings. Tomorrow after the bell, implied volatility on the options chain is not ideal. If you are going to force it, that's fine. I would use 616 as a level, but we'll leave it off at that because I personally do not plan on trading. The CRM is going to be a trade idea for you as well. So I've got 4 additional ideas. I know I didn't say in the intro, but if you made it to the end, you're going to get rewarded with a couple of ideas. CRM, multiple inside bars setting up here. If we take a look at the hourly chart, you can see the range compression. So all I'll be watching for on this one is whether or not we can break this sort of triangle. I'm typically not a fan of trend lines, so in the upward direction, I'd be looking for a move over 279.25, gets a gap close overhead. If we break down underneath, it's got to be the low. Unfortunately, it's got to be the low here at 270.70. We'll look for a move in the downward direction, but as of right now, trying to navigate the possibility of a higher low, equal high, equal high, equal high. Can we, really build this out as an ascending triangle and break? It would help tremendously if the broad market was seeing a counter trend move as well. That's CRM. Next up, we've got V for Visa. What's going on over here? It's very similar to a lot of the tech stocks we've looked at so far, with a big break, respect so far of a level, building out a bear flag here. So you could do a couple of things. You could do basically a break of the trend line, gets you back down to the equal low. H pattern flush gets you down into the next level below, which is at 267. If there's going to be a recapture here, higher low over 273.48, I would say it's going to be fairly choppy through that zone. So I'm not thrilled about the long idea here. The CRM gap overhead, thin structure overhead makes a little bit more sense to me based on ease of trade. Let's move on over to McDonald's. MCD is the ticker on that. Mickey D's. The golden arches are upside down. On the daily time frame chart, I want to show you where we are relative to this breakdown point over here. So sure, bear flag broke down, thin structure. This is now building out as a possible double bottom. So when I say the golden arches are inverted, there you go on the hourly chart. There it is. We can break up and over that level at 269.85, looking for a retracement through this thin structure. So to me, this is actually more attractive than something like Visa, where we saw that there was a lot of chop off to our left, right? So McDonald's, possible long up and over this as an inflection point. And then last but certainly not least is Coinbase. Let's go COIN on that one. And we will take a look at the daily first to show you that we've got back-to-back hammers here. I'm looking for a counter trend, but not thrilled about trading it. I mean, you could use that as a scalp, but more so thinking about this. What's the opportunity for a possible possible lower high up against this as overhead supply at 238, right? On the hourly time frame chart, you can see, again, if it's going to turn into a double bottom, fine. You've got to clear that neckline. But when we get here, I'm thinking about the opportunity of a lower high, not necessarily continuing to push my luck in the upward direction. That's all I've got for you in today's episode of the abbreviated midweek market update. If you enjoyed this format, let me know down below in the comments section or by giving the video a very simple thumbs up. We will be live tomorrow morning at 8:15. We're live every morning at 8:15 Eastern time for our pre-market prep. Hope to see you there. Coffee and donuts, let's bring them out tomorrow. We'll go coffee and donuts for the unemployment claims. But with that said, we wish you a green trading week, and I'll see you in the next one.